right. Thank you, everyone. And thank you for that introduction. And for everyone's sake, it's better that I speak English, which I know, and not Italian. So, in terms of what I'll talk to you about today, I'm Markus Lampinen, and I'm one of the founders of Grow VC. We've been in crowdfunding for about 4 years now. So I'll talk to you a little bit about global trends, what's going on, a little bit about why crowdfunding is important, what we're seeing, implications and applications of crowdfunding all around the world. There we go. So where we started in 2008 with this idea that the internet was going to change how entrepreneurs and investors interact all over the world. We created a marketplace, growvc.com, back then, with this idea that everybody should be allowed to participate in the companies that they believe in, and early on when it actually matters. We had the very, very basic idea that we wanted to democratize startup funding. So when you have a company that you believe in, where you can add value, you should be able to get involved at the very early stage. Because from the company's point of view, that's really where it matters the most. We've since rolled this platform out all over the world. We've operated in nearly 200 countries. We have our own team on 6 continents, and we've seen and been very privileged to see the entire landscape develop over the past 4 years. And even though we are still early on in the entire marketplace, there are lots of fundamental trends that we already see in terms of how this market will develop all over the world. The internet, and where we started from, has a big impact on how people run businesses, how people interact. The access for information and the ability to do due diligence and research online means that normal people also have a lot of smarts to actually participate in companies. Not always as investors, but also as investors, then advisors, mentors. And if you want to find the next hot company to work for, why shouldn't you have access early on? Just to take a couple of steps back, I've got a good introduction now from the past couple of speakers in terms of what crowdfunding is. But in a sense, crowdfunding is as simple as having many people participate with little money. One of the fundamental things that we believe in is that normal people should be able to also participate in companies, not just accredited investors as we have in the US, or then sophisticated investors, but everyone with the right framework should be allowed to invest in companies that they believe in. So companies that maybe your cousin's company or the restaurant that you love in your local setting. But everybody should have that option. And this hasn't been true before crowdfunding now. And even though the landscape's changing, it's changing one step at a time. In the US, we have the Jobs Act that's going through, that will open a lot of the different regulation, that will create a sustainable framework to how this operates. And we believe that that sustainable framework is going to be very, very crucial for creating an actual ecosystem where people can participate and companies can go through and create more and more sustainable businesses going forward. For normal people, crowdfunding means that they can get access to a new asset class that is not just startups, but also other types of asset classes that they haven't had access to before. And I'll talk a little bit more about where crowdfunding can be applied, but in a sense, it doesn't mean that startups is the only thing where you can apply crowdfunding or where crowdfunding can be useful and leveraged. We started in securities crowdfunding, and what this means, especially with our past 4 years of experience, is that we've had to take one step at a time in developing the sustainable framework. And why we believe that securities and actual investments are so important is that there's a big difference when you're actually giving money to a company rather than investing it. If you have a potential gain from the company being successful, your decision making is also going to be very, very different. If you're just giving money away or pledging it or purchasing products, the thought process is very different. And we believe that it's not just about the money, but the information that you can bring into the early stage. Also, in terms of securities crowdfunding, it doesn't mean that it's only equity investments. Equity investments mean that you invest for a stake in the company in terms of ownership. But if you invest in a restaurant, for example, owning 10% of a restaurant, unless you're a manager looking to run the restaurant, that's probably not the wisest investment, because a restaurant is probably not going to sell for 100 times its value. At the same time, restaurants and similar businesses with sustainable cash flow, they can be great investment targets where you, for example, lend them money with an interest. And in terms of the Jobs Act in the US, it doesn't refer only to equity investments. It is broader. It talks about securities. In terms of crowdfunding, the early stage has been very complicated. And ever since we got into this space, we looked at the early stage in terms of startup funding as something that needs to be fixed. Crowdfunding is part of it, but ultimately there's not going to be any single solution that solves the entire early stage investment market. The early stage investment market has always been very untransparent. It's had low liquidity. Startups are very peculiar, meaning that each startup is very individual. You can't bundle them thousands of together and just treat them the same, because you have different people, different prospects, and different models, and so on. But by bringing more people into the early stage, by bringing more people as investors, as advisors, into the very early stage in terms of investing money, validating cases, working with entrepreneurs, we can get a lot of data into the early stage. And the early stage doesn't have that much data right now. So the more information that we can bring there, the more transparency that we can actually bring to the early stage investment market, then it's going to benefit everyone that's involved in the actual market itself. And just a point about entrepreneurs, once you actually have 1,000 investors in your company, or 100 investors, or whatever number, then these people will most likely be your customers as well. These people will most likely be your advocates, your marketeers, your team that supports you. So the money is important, don't get me wrong, but at the same time, once you get the money as an entrepreneur, you're not done, you're just starting. So you need your support network to take you through that ecosystem. Now let me take a couple of steps back. When we started out in 2008 and launched the platform in 2009, we knew that we were very early. But at the same time, having watched this market develop all over the world, we see that it's not just about the platforms. It is about creating the entire ecosystem around the platforms, around different players that work with platforms, and around this entire marketplace. Because if we look at startup crowdfunding or crowdfunding in general as just one thing, then it's bound to fail because it needs to work with the entire ecosystem. We built our own operations into what we call the Grow VC group. So my role is nowadays, I'm the founder of Grow VC, but I'm also the chief operating officer of the Grow VC group, which oversees various different activities all over the world. This means that we operate our growvc.com marketplace. We provide the platform for different marketplaces. So anybody that's looking to set up a marketplace, they can go to crowdvalley.com and start their own marketplace on the basic fundamental assumption that marketplaces and building the technology, that's not the most important business for these companies, but running the actual crowdfunding business is the most important thing. We also believe that this entire framework, this entire marketplace that's developing, it needs various different pieces to this puzzle. So the text that you can't see that's cut off, which I apologize for, it says that there's also other parts of this ecosystem that we provide. Like we have an advisory unit, we have our own investment vehicle, and we have our own portfolio of companies that we've built all over the world. And the basic point of this setup is this market is going to develop, but it's not going to be a single easy market, but it's rather it needs to be connected and interconnected to everything that's out there in the marketplace, and also everything that will be there in the future. This is just very briefly the Grow VC group setup. Essentially, we have three branches. We provide finance and services through our investment activity, platform, marketplace, And then we provide the infrastructure, so people that are looking to set up their crowdfunding platforms can set that up and use it in a very sustainable manner. And then we have our own portfolio of global companies where we participated in. When we look at this entire market growing up, we see that we are still very early on in terms of the big market, in terms of the impact that it will have all around the world. Here in Rome, you definitely know that in terms of regulation that you have now on the discussion table, it will need to be implemented. It will need to be implemented in a very secure and sustainable framework. And even from there, it needs to work with the ecosystem. It's not just about the regulation. It is about creating a sustainable and viable business models all around the regulation. And what we've also seen that all these parties that actually can benefit from crowdfunding, they have to work together. It will not work by people just doing isolated things. Through CrowdValley, which is the platform provider that we operate, we have over 400 different platforms that operate on CrowdValley. And I'll give you a couple of case examples of these later on. But this essentially means that anybody that's looking to leverage crowdfunding, whether they're creating their own portal or whether they're incorporating their crowdfunding into some existing business model, like an incubator, accelerator, angel networks, funds, wealth managers, family offices, and so on, everyone can really benefit from having more effective and efficient tools to work with. I talked a little bit about the securities aspect of why investing is so much more important for companies than actually giving money. And this is where we started in terms of equity investments. This is where the Jobs Act also comes from in the US, starting with actual equity investments into startup companies. But at the same time, if we look at what's needed out there for more jobs and for economic growth, it's not only the future tech companies that we should invest in. It is actually going to be a lot wider than only investing equity. So if we think about the market out there, in the US we have about $30 billion worth of VC and angel activity. But if we look at the friends and family market, that's nearly $200 billion already. And if we look at the potential of bringing crowdfunding into small and medium-sized businesses, then that goes into the hundreds and hundreds of billions of dollars. The point is that crowdfunding for equity and equity investments is just the start. There are so many different applications to actually explore with new online investment models, and then incorporating them into existing business models. And I'm not saying that venture capital and angel investments aren't part of this market, because they're a very, very fundamental part. But at the same time, lots of people will invest in companies that they actually know and trust. We talked about trust a little earlier as well, and trust is very, very important in new funding models, but also the old funding models that we have. One of the reasons that crowdfunding is on the discussion agenda today and how we've got here is the emergence of different trust networks online. And as a case example, I really like Kiva. And Kiva started in 2005. And if you look at their progress to date, they've lent nearly hundreds of millions of dollars to third world entrepreneurs. And one of the statistics that really, really inspires the work that we do as well is the repayment rate. That out of these nearly $400 million worth of loans, 99% are paid back. And these are to third world entrepreneurs that operate in very, very harsh conditions at times. And then when many times Western lenders lend money, what do they do when they get it paid back? They actually just invest it again and then return the loan. So it starts this very virtuous cycle. And Kiva is by no way new, but the example that they set starting in 2005 and just operating almost for a decade already is definitely very fundamental. And if we look at where people actually want to invest, we see that in the angel market and in the existing market out there, people invest very locally. And there is a reason for that. Because once you go work with people, you get to know the local restaurant, you have your cousin's startup or whatever, then you build that trust with them. You know who they are, you know how they work, you know how they think, you know the ecosystem. Therefore, ultimately, it does make sense to create an ecosystem that starts from the grassroots, that goes to the very, very top, but it also needs to start at the grassroots, because that's where all the trust is for ordinary people all around the world. And this is also why I say that's bigger than the Facebooks and Skypes, because ordinary people probably don't want to invest in Facebook because they don't know how it works. They might want to invest it at some point, but it's probably not within their comfort zone. And everyone should invest and operate in their own comfort zone. We see that especially for how the new world's developing, this idea of an ecosystem is very fundamentally important. Not just of one ecosystem, but for one very big ecosystem that connects smaller ecosystems. So what I mean by that is just looking at, for example, what you have in Rome or different cities where you have incubators, universities, angel networks, alumni organizations, and then maybe some early stage investors or other stakeholders that provide services like consultants. They typically are not connected. And I know that we're talking about crowdfunding, and crowdfunding is very new and it's a very, very novel concept in many cases. But just by bringing the local ecosystem together and bringing them online so that they can share deal flow, for example. If we think about who you actually trust as being in that ecosystem, once you know who companies actually work with, like the local incubator, the local university, you know what people have coached them, you know what people work with them, you know their customers, that adds a lot of value. And by bringing that information in the early stage, we get, again, more transparency in terms of what companies are actually worthwhile to back. And we actually believe that crowdfunding has a fundamental role to play in making more wise investment decisions in the future. Because if you have all this information accessible to everyone, then it becomes a lot easier to also support the good cases and also to not then support those cases that ultimately will not be that successful. If we look at the market, how it looks right now in terms of crowdfunding, and not just crowdfunding for securities, but every sort of crowdfunding that's out there, it does make sense that, let's say, 10 years from now, we'll have one big Kickstarter. I mean, that just makes sense. It might be the player that has the most liquidity. I mean, I don't know if it's going to be Kickstarter, but some Kickstarter. The platform that has the most liquidity, most deal flow, most traffic, and that everybody trusts. Because, again, if we look at Kiva, the people don't know the third world entrepreneurs, but they know Kiva, and they know there is a lot of trust associated in that process, too. But once we actually look at securities markets and the financial market, there is a reason why we have so many stock exchanges in Europe. There is a reason why you have so many brokers, so many specialized brokers, exchanges, marketplaces that focus on some specific asset, some specific investment models, geography, region, niche, because they can add a lot of fundamental value to that process. There we believe that this ecosystem aspect is fundamentally important because we're not going to see one big Kickstarter in securities, because it's not going to be one big investment model or one similar investment model for all products, like restaurants and tech companies are fundamentally different. But then also investing in, for example, real estate is fundamentally different than investing in companies. And we see that especially in terms of this ecosystem of angel networks, incubators, and all these that exist in the very early stages. It's fundamentally important to get them connected and adding data to that early stage. Even in terms of investments, once a company actually goes through a crowdfunding round, let's say you have company A raising $100,000, they're not done. I mean, they're just getting started. So they need to fit into this ecosystem. They need to be able to work with the next angel network, accelerator, whatever strategic consultants you might have, and then in some cases even a stock exchange. So we need to create the framework so that it has continuity. It doesn't just end where people get money, because that's fundamentally flawed in terms of entrepreneurship. In terms of entrepreneurship, it is a journey, and that journey has ups and downs, but it needs to be supported by that entire ecosystem. I'll now talk a little bit about a couple of case examples and leave with you with some thoughts of how crowdfunding can be applied. Crowdfunding started with startups and equity, but crowdfunding, if we think about the very definition of having many people and small investments, doesn't necessarily mean that these people are any specific types of people. They can be ordinary people, they can be institutional investors, they can be accredited investors, dentists, doctors, they can be all sorts of different audiences. Also doesn't mean that the underlying asset is equity in startups. It could be real estate, could be various other things that some specialized broker has special knowledge in. We've had the privilege of working with various cases, over 400 now all over the world. And I wanted to pick 3 cases that are a little different than what's being discussed today and in the discussion that's kind of starting the crowdfunding ecosystem here in Italy. We have a broker partner in the US that has been around for 30 years that does crowdfunding. Well, they're doing crowdfunding now, but they've been doing 30 years worth of broker activity with oil and gas properties in the US. So essentially drilling for oil, and they came to us at some point, said that they love crowdfunding, but they want to do it for something that they know and trust. And they said that oil and gas properties are their area of expertise, and they have a fundamental pickup of people that want to participate in those. So what they're doing is they're doing crowdfunding for institutional investors now. They have a co-investment fund that invests alongside these institutional investors in these properties, and they're looking for this process to bring up more efficiency into what they're doing. And in the future, they want to be able to provide this as an investment model for ordinary people as well. I mentioned real estate already, and we actually have several partners already that are doing crowdfunding for real estate, because many of them see that crowdfunding is a way to bring more liquidity, more transparency, and more efficiency into an asset class that people know. I mean, everybody knows about real estate. It's a very real asset. Lots of people have made money with real estate. But at the same time, it comes with maintenance. It comes with different specialized knowledge. So making that more accessible to people can be very interesting in various different locations, not just in the city nearby, but maybe in other cities. And I talked about this already a little bit, but we see many of these cases. We have dozens of these cases where you have a university, an incubator, an angel network, and then some sort of investor partner like a fund or an angel network that all work together in this local ecosystem. It doesn't mean that they all do crowdfunding, but for example, the companies that come through the university and incubator that go to the angel network, that is a very interesting ecosystem to get normal people to participate in. Because when you know the university, when you know the incubators, the people that run the incubator, the people that run the angel network, the people that have invested in the company, and other people, it becomes very, very interesting to actually participate in that ecosystem and add value there. We started with this with a fundamental idea that the internet was going to change how people behave and how people actually participate in new companies. Going forward, we expect that crowdfunding is not only going to grow, but it's going to evolve a lot in terms of how we look at it right now. And for it to evolve in the more sustainable and proper framework it needs to actually adopt, it needs to not just be its own silo, but it needs to be connected to all these different actors in the ecosystem. So all the way from universities, incubators, startup communities, to then brokers, funds, stock exchanges, whatever actually touches on startups and crowdfunding and investment assets in the future. Because eventually these will have to fit in together. You will have to have companies that grow up that are also able to then participate in the stock exchange. And creating this ecosystem is something that we've focused on a lot. But at this point, as the discussion also opens up in Italy, it's very important for all of us to realize that we have to work together, that this market's never going to work if everybody does something independently. And by tying things together, we can create an ecosystem that really catalyzes change and then really also makes a proper impact on how companies and investors act in the future. And this is what I wanted to leave with you today. And if you have any questions or anything like that, I'll be around here. And I actually have with me a couple members of my team, one of which speaks a lot better Italian than me. So if there's anything that you're puzzled with, anything that I can answer, then feel free to follow up in person or via email, and I'll gladly connect further. But thank you.